Good morning, and thank you so much for being with us at the Carbon Pricing Hub event. I think another good morning because I think I started a little bit too early. My name is Talitha Muusse and I will be hosting this event. I'm an entrepreneur in my daily life and also, well, I consider myself to be a climate activist, and then specifically from the point of view from the younger generation, which is of course very important when discussing this topic. We're at the launch event of the Carbon Pricing Hub, and we're in this beautiful building live here from Brussels of Maastricht University. And what the Carbon Pricing Hub is aiming to do is to create a space for everybody who wants to participate and be involved with the ETS, with the emissions trading scheme. And I really like that because it's about creating a governance where also conversation and discussing with each other bottom up about what the impact will be of the ETS on people in Europe especially, and how everybody can be part of this bigger plan. I think that's really interesting. And I think we're going to discuss today also, we're going to talk in detail about the policy plans, but we're also going to discuss from a stakeholder perspective what this means for Europe and its citizens, for ordinary people. I really would like you to be involved in the conversation, so not just listen to us, but also actively join the discussion, and you can do that by using the chat function. I hope you can see this in your screen, so at any time you can send a question. There's a whole team at the back who can see what questions are being asked, and I will make that part of the conversation. So maybe just to get started, a little warm up, I would like to ask you a poll question to see also how familiar everybody is here in the audience with the European emission trading scheme. So I would like to see now the first poll. How familiar are you with the European emission trading scheme? And you can see 4 options. I'm quite new to the ETS. I'm a bit familiar with ETS. I know how ETS works, and I consider myself to be an ETS expert. I'm already looking around. Experts, all on the ETS? More or less?
More or less.
More or less. I think everybody is more or less an ETS expert because I was listening to all these podcasts for my preparation. It's quite a technical topic. So also at any time, if you have the feeling this conversation is going out of hand, it's too much in depth, too much with expertise, language, also feel free to let us know, and we can also consider that. I would like to see the results if that's possible, just to get a view on. I know how the ETS works. Okay, there are some people, 70% who consider themselves to be an expert. I'm quite new to the ETS. Yeah, so I think we have quite a mixed audience. So I think that's good to know that at any point we might sometimes need to explain a little bit more of the technical topics. Well, you see other people sitting here next to me. That's my lovely first panel. Maybe to show you what today's program will look like. We have 2 panel conversations. The first panel conversation will be more about the policy-making process, and the second panel will be about the stakeholder perspective. We have a break in between, and I think it's really important to mention that the second panel is definitely also worth to wait for. So just like grab a lunch, go outside to get a coffee, and then also come back to join us. And we're going to start off next first with a presentation. Before I do that, I would also like to say that this whole collaboration is a consortium of 10 European NGOs who harness people power to reduce emissions, for example, by doing research, advocacy, and organizing public events like this. So this will not be the last time. I hope you'll be joining us. It's a program funded by the European Union LIFE program and the European Climate Foundation. And there will be, this is actually the launch, so I think maybe we can have a little moment for that. I think it's always special. I'm counting actually maybe on champagne afterwards. But this is the kickoff of this event, and I hope it starts a dialogue. So please stay involved also for future events, and hopefully also to have events not only digitally in the future, but also with you as an audience being physically present. So let's dive now more into today's topic, because we're going to discuss the ETS. So as you might know, the European Commission has adopted a big package full of proposals to reduce the net greenhouse gas emissions by at least 55% by 2030, which is also known as the Fit for 55 project. Compared to 1990, we have to reduce these emissions by 55%. To do that, we also need to revise the emissions trade scheme as part of the new Green Deal. And I think today we're going to talk more in depth about the revision of the ETS, but also maybe other policy instruments that are part of the Green Deal. Because, of course, what we want to do is prevent catastrophic climate change. So today's discussion will also be, are these proposals enough to really combat catastrophic climate change? Let's talk about it. We're going to kick off first by going more into depth with this proposal, and also to really look at the numbers, the data, and also the results we've had so far. And to do that, I would like to ask Pieter-Willem Lemmens, if I say it correctly, to join me, or to actually take the stage from CLIMACT, with maybe the main question: is this new proposal making us fit for 55? Are we going to reach the 55% emission reduction?
Okay.
Thank you.
Thank you, and also from my side, good morning to everybody. Very happy to be here. Very happy with the invitation. The ETS, as most of you will know, is one of the cornerstones of the EU climate policy framework. It covers little less than half of overall emissions, but it covers those sectors which are expected to bring the biggest contribution to the overall minus 55% reduction objective. So it's a very important piece of policy, and very important that we ensure that it can actually deliver what it's intended to deliver. So my name is Pieter-Willem Lemmens. I work for CLIMACT. CLIMACT is a Belgian-based consultancy firm working on climate topics, and we do inter alia. We do these kind of studies on climate policies to see how they deliver. What I want to do today is we did a project where we built a model that allows us to simulate how the system works and will work in the future. And with that, we assessed what we can expect from the Commission's proposal, what kind of impact can we expect on a number of important indicators. And what I would like to do with you today is just take half an hour of time to bring you through the main findings of our study, what we think that will happen under the ETS with the proposal of the Commission, and also to refer you to our model, which is, as of today, available on your website. You can download it there, you can play around with it yourself and see if we change the Commission's proposal, what is the impact, the expected impact on the number of parameters. So just briefly, an overview of the presentation I would like to give is first to very briefly introduce the project that we did, especially mention why we did it, and also how we did it. I won't go into too much detail, but I think that's important to briefly mention so that you have this in mind. And then I'm going to discuss what we think the impact will be on three main indicators. First of all, very important, of course, supply and demand of emission allowances under the system. So what's going to happen with the surplus, what's going to happen with supply, what's going to happen with demand. Secondly, what can we expect in terms of impact on free allocations for mainly industrial sectors? Are they going to decrease, and by how much? And for each sector, are there differences? And then lastly, also a very important hot topic in discussions, what's going to happen with auction volumes, how much auction revenues can member states count on to support climate action within the ETS or outside in other sectors. I'll try to do this in a little bit less than half an hour so that there's still some room left for Q&A. So if you have any questions, please do not hesitate to put them in the chat. I've understood that not everybody in the public, in the audience is an expert, so I'll try to keep it not too technical, but still if there's anything unclear, please don't hesitate to ask your questions in the chat. So first of all, let me briefly introduce a project. Basically, why did we do this work? Because we feel that the ETS over the years has become quite complex, quite technical. It has already been mentioned. And we can imagine that several stakeholders feel that they cannot fully assess the impact of different policy options because it's become such a complex system. What we wanted to do from CLIMACT's side is to provide a transparent and open source tool, the model that I mentioned, so that everybody can see what is the impact of different policy options. so that there is a common understanding within the broader stakeholder community. Okay, if we organize it like this, what can we expect in terms of impacts? And the ultimate aim of that is, of course, to facilitate the decision-making process so that everybody at least understands what different policy options do, and based on that, they can form their own positions and go in discussions with each other. So that's really the aim. I think the key word here is really transparency, making sure that it's clear for everybody what the impact is of different possible approaches. In terms of scope, important to mention, what we did, we really focused on the existing system, which covers the power sector, the industry sector, aviation, and as the Commission is now proposing, will also include maritime in the future. Alongside that, the Commission is also proposing a separate system for buildings and road transport. And I just want to make it very clear that that's not covered by our analysis. So our analysis really looks at the existing system, and we didn't go into the separate system for buildings and road transport. And then finally, in terms of output, what did the project deliver? As I mentioned, this open source model, which you can all find on our website, download, play around with it. And also a brief report where we already used that model to assess what is the impact of the Commission's proposal with some key findings. Before continuing, I would like to say that we're very grateful to the European Climate Foundation, who has provided funding for us to do this work, which we think is important. Very briefly on the methodology, how the model that we developed, how it works is basically it's a simulation tool. So it's not optimizing things. It's really just seeing if you do this, then what happens. The user, so when you download the model from our website, what you need to do is make some assumptions on where are emissions going to go and how are we going to design the system, what kind of policy options are we going to take. And in function of that, the model will tell you all sort of things on what's going to happen with supply, with demand, with free allocation levels, etc. Just important to mention now already, what the model does not do is it does not give you a carbon price. It does not tell you carbon prices will go up or down by this much. That's not what it does. You have some indication of what supply and demand is going to do, so that gives some idea, but we don't have carbon prices. And what it also does not do is tell you how are emissions going to evolve depending on how you design the scheme. So that's something that you have to put in there as an input. It's not an output, just to make this clear for everybody. And so, of course, one of the important assumptions that you have to make when using our model is what are emissions going to do? And just what I want to say here is that for all the results that I'm going to show later on in my presentation, we've used this assumption on what's going to happen with the emissions. Basically, what we assumed was that emissions will decrease in line with the overall minus 55% reduction objective. We use the Commission scenarios for that. So what you can see here on the graph is first up to 2020, the actual verified emissions. Then 2021, we expect some increase in emissions again. We know in 2020 they were very low because of the COVID crisis. We know in 2021 gas prices have increased. There's also some economic recovery. So we do expect some increase, still below 2019 levels, but still some increase compared to 2020. And from there on, it basically decreases in line with the Commission is expecting under their emission scenarios. So that's the assumption that we made. Good to keep this in the back of your head. We already assume that the target is being met. And then in terms of policy options, I'm not going to go through all the details, but basically we aligned all the options in the model to align completely with the Commission's proposal. So you can find all the details in the report. One important thing to mention is what's important is the year when the changes are going to happen. And there we made the assumption that policymakers agree on everything in 2023 so that the changes start to apply as of 2024. That's just a little bit of background on the methodology and the assumptions. Now, what do we expect in terms of impact? First of all, very important, of course, supply and demand. So what do we see, what would happen, first of all, with the cap, like this theoretical ceiling on emissions in the EU? There we see, as also stated in the Commission's impact assessment, the cap decreases to reach a point which is 62% below 2005 emissions by 2030. And if we look at a 10-year period, so from 2021 to 2030, we see that the total cap budget decreases with 10%. And that's even when taking into account that the system is enlarged to maritime. So the budget decreases with 10% even if you put more sectors in the system. And if you just look at the stationary installations, so power and industry, the total cap, the theoretical emission budget even decreases further, 14% compared to the directive that we have today. So there we see definitely a significant increase in ambition. However, the cap is a theoretical concept. In practice, the actual supply, the actual amount of allowances that's brought to the market is not always 100% the cap. There are several mechanisms in the system which create a difference between the theory and what happens in practice. And if we look at what we expect to happen in practice is that we see supply to increase again in the second half of this phase. So that's the full line that you see in this graph here. Supply will decrease in the coming 5 years, but then it will increase a bit. And because of that, the surplus will also increase. And that's the striped line that you see. We see the surplus decreasing to about 450 million allowances by the half of this 10-year period, but then it starts increasing again. We were quite surprised by this finding, and we looked at what are the underlying drivers, and actually we see 3 reasons for this. First of all, despite the fact that the Commission proposes to tighten the cap, we still see that the cap would be significantly above real emission levels throughout most of the period. I will show this in a bit more detail afterwards, but that's the first reason. The second reason is that already under current rules, there's this built-in mechanism where basically you take 3% of the cap, which you put in a reserve for free allocations. And because of how the system is already today designed, this leads to actually part of the cap from the first half of the period to only come to the market in the second half of the period. It's quite technical. I will explain a little bit more into detail in my following slides. And then a third
Recording in
important reason
progress
is that the Commission is proposing some changes to the Market Stability Reserve. The Market Stability Reserve, for those of you who don't know what it is, it's actually this mechanism that absorbs surplus when there's too much allowances on the market and releases some when there's too few. And the change that the Commission is proposing softens basically the impact that we would expect on a system. But let me take a little bit more time to explain these 3 reasons in a bit more detail. So first reason, here you see the full line above is what would happen with the cap. And then the bars are what we expect in terms of emissions if we achieve the reduction objective. And there you see that at least until 2028, the cap remains significantly above expected emissions for most of those years. Why is that? Because up to now, ETS sectors have reduced much faster than the cap. So we start with emissions which are far below the cap, and that will continue to be the case with the Commission's proposal. Then secondly, this 3% buffer, what you see here is a difference between this theoretical cap and the actual supply, which are the bars on the chart. You see in the first 5 years, actual supply, it's much lower than the cap. One big reason is because of this Market Stability Reserve, which will prevent allowances from coming to the market. But a second important reason is this 3% buffer mechanism that I already briefly explained. So basically, the current directive says that each year you're going to take 3% of the cap, put them in a buffer or a reserve as you wish, and you're going to bring them to the market to make sure that there's enough free allocation for industry. And because of how the system is designed, what will happen in practice is that the coming 5 years, this 3% will not come to the market. And then in the last half of the period, when actually emissions and the cap are finally at more or less the same level, you're going to bring this 3% buffer on top of the cap. So there, again, you're going to increase supply above demand, and that causes a surplus to increase. And then third reason, this Market Stability Reserve, also quite technical. Basically, the reason why we think the impact will eventually be softer compared to what it is today is because the Commission has proposed this new threshold. It says as long as the surplus or the total number of allowances in circulation on the market is between 833 and 1.96 billion allowances, so these are the top 2 lines, you're only going to take a small part of the surplus out of the market and put them in the reserve. This is a new proposal of the Commission. And if you see below, what we basically did is we looked at how would the system work under the old rules, how would they work under the new rules. The old rules are the green bars, the new rules are the dark blue bars, and there you see that the amount of allowances that are being pulled from the market, at least in the second half of the phase, are much lower because of these new rules. So those are the three causes that we see for increasing the surplus. You can discuss whether that's a problem, yes or no. One reason for concern that we see at CLIMACT, at least, is that because of the surplus, there is less guarantee that these sectors will actually deliver the minus 62% reduction objective that they need to do. And we've looked, in the most extreme case, this design and this surplus would allow emissions to be reduced with only 58%. I say only, it's still quite a significant reduction, but it's not enough to fully meet the overall minus 55% reduction objective for the EU as a whole. So from this point of view, you could argue that there is a reason for concern. We've also looked into options of how you could solve this problem. We've basically looked at two different options. One is these MSR thresholds, instead of keeping them fixed for 10 years, let them decline, let them decrease in line with how the cap is going to evolve. So basically what you say is the surplus that we allow in the market needs to decrease in line with the cap. Like the smaller the cap, also the less surplus you should allow in the market. That's one option. The other option is a stronger adjustment of the cap to align it better with actual expected emissions. And then option 3 is basically a combination of option 1 and 2. And what you see here on the graph is the evolution of the surplus on the different options. And you see that each of them are quite effective at further reusing the surplus on the market. And if you combine both, of course, there you can expect the largest impact. I think that's the main story that I wanted to bring on what we expect to happen with supply and demand. Second important part is, of course, free allocation levels. We know that this is a sensitive topic. There's quite a bit of concern, especially from industry, about the impact of the system on their competitiveness. So that's also an area where we looked into to see what can we expect from the Commission's proposal. Basically, in the Commission's proposal, there are 5 different ideas or 5 different things that could impact these levels of free allocation. First of all, very important, of course, the Commission is proposing to introduce these carbon border adjustment measures for some sectors, and at the same time phase out free allocations for these sectors. So that's a very important one. Secondly is how you are going to set the benchmark to determine free allocation levels. And there the Commission is basically proposing to make these benchmarks a bit more ambitious than what they could be under current rules. Thirdly, and that's also a bit technical, the amount of allowances available for free allocation is limited, is defined as a specific share of the cap. If your cap goes down, then also the number of allowances available for free allocation goes down. And if there are too few allowances available, you have a higher chance of triggering this infamous cross-sectoral correction factor. So that's the third parameter that can impact free allocation levels. Then a fourth one is make free allocation conditional on installations doing energy efficiency improvements. And a fifth one is an adjustment of these benchmark definitions. Just what I wanted to make clear is that for our analysis, we took into account the first 3 elements because there's already clarity on what their impact could be. Number 4 and 5 we didn't take into account because there's not yet sufficient detail to know exactly what this could mean. But if we take these 3 first points into account, what do we see happening? In general, on average, free allocation levels would by 2030 decrease by 37% compared to 2021 levels. So this is across all industries. What are the drivers of this reduction? So there's already some rules under the current directive which will decrease it with 7%. Then the higher benchmark rate, an additional 7%. And then, of course, very important, this carbon border adjustment mechanism and the related phase out of free allocations. So this is on average for the entire industry. But if you look at several sectors within industry, there we see quite big differences. We see, of course, those sectors which would be covered by this carbon border adjustment mechanism. On the left side, steel, cement, aluminium, they would lose quite a big portion of their free allocation. Then you have a whole range of sectors, which is more between, I would say, 20 and 35% reduction in free allocation. And then on the very right side, you have some sectors for which the impact is much less pronounced: refineries, glass, and mineral wool. So there we clearly see quite differentiated impact depending on which sector you're looking at. And one point that I wanted to mention here is this cross-sectional correction factor, which is, of course, a very sensitive topic. What we assessed is that if production levels remain constant, that this correction factor would not be triggered. There would be just enough allowances available, with a small margin even, to cover all demand of free allocation, and so this correction factor would not be triggered. We see that other people, and I'm referring now to the report of Mr. Pieter-Willem, who is also on the panel today. We see there that Mr. Liese is more concerned about this, so he provides some additional options to prevent this triggering. Just one point I wanted to make on that is from CLIMACT side, I think it's important to realize that there's a difference between solutions that further redistribute the pie and other solutions which increase the pie. I already mentioned the fact that the surplus would increase even on the current proposal. Increasing the pie to avoid this cross-sectional correction factor could risk to increase that surplus even further. So that's definitely a point of attention that we would like to raise on that discussion. Finally, on auctioning volumes, and there it can be quite short. What we see basically is that for all member states, so a big portion of these allowances that are brought to the market via auctioning, the revenues go to the member states. And there we see that for all member states, the volumes would decrease. On average, we expect a 21% reduction in volumes compared to the current directive. So if we fully implement the Commission's proposal, auction volumes will be 21% lower compared to the current rules. And we see also some differentiation based on your income level. So on the right side, so you see mainly member states with lower levels of GDP per capita. There the impact is a bit smaller because they get additional allowances through the modernization fund. On the left-hand side, you see the wealthier member states, and there you see that the impact is a bit larger, with some outliers on the very left, like Luxembourg and Ireland, which would see a very big decrease in auction volumes. Of course, when you want to look at revenues, you also have to take into account the carbon price. We see there that there has been quite a lot of increases in the last years, I would say, at least partially driven in anticipation of this proposal. So if we look at the overall revenues there, we would, of course, expect an increase. Your volume decreases less than your price has increased. So in terms of auction revenues, we think that the Commission's proposal has actually led to an increase in revenues. And of course, final slide that I wanted to show on this, the big winners we think are the Modernization Fund and the Innovation Fund. There we see significant increases in volumes, especially for the Innovation Fund. There we see more than a doubling of the volume of allowances that would be auctioned for this fund. That together with the increase in price means that there will be quite a lot of financial means available to further support the transition. And these will, of course, both be very important tools in the integrated approach of the EU to deliver these reductions, these ambition reductions by 2030. I think that, in a nutshell, were the main messages of our report. I would like to take some time for Q&A, and before going into the Q&A, already repeat that we have a full report available on our website. If you go to our website, which is www.climact.com, in the news section, you will see that the most recent article is on our reports. You can find a link to a report, and you can also find a link where you can download our model, which is just an Excel, basically. Within the Excel, there's more explanation on how it works. You can use it to make your own scenarios to assess the impact of a different set of policy options. And we're also available to develop this model further in the future. So if there are options that you would like to have assessed, which are not yet in there, we're available to further elaborate on that and to include those in our model. I think that's the story that I wanted to bring today. Very much looking forward to any questions that you might have.
Thank you very much, Pieter-Willem. I like to applaud, but I hope everybody is clapping. Maybe we can check if there are already some questions in the chat. chat. Maybe just quickly to see if there's any maybe technical questions. No, not yet. Okay, then we're going to start up the conversation. Maybe just to have a first like yes or no answer. If the question is the EU ETS proposal fit for 55? Would it be yes or no? Overall judgment.
Can I answer almost?
Yeah, okay.
I think almost. I think there are some very good elements in there. I think if you would go a little bit further, as I explained, in making sure that the cap is more aligned with emissions sooner, then you have a better guarantee of actually delivering the emission reductions that you need.
Yeah, could you explain to me how that works? Because you said if the cap would be more in line with the emissions, which doesn't right now in this proposal until almost nearly 2030, right? Why does that lead or could lead in reality to more emissions than we want? How does that work?
Because it's a cap and trade system, which means that you have a budget. You don't have to look at what the cap does in 1 year. You have to look at the entire budget for the entire period. Yeah. And because we start with a cap which is really above emissions, because in the past we've outperformed what we wanted to do, you have additional budget now on the market. We also have some surplus that we carry from the past. And that surplus and that budget, you can use it to cover excess emissions by the end of the period. So there's a risk that by 2030 your emissions will actually be above the cap, but you cover those with surplus that you got from previous
Why
years.
was that done, you think? Why didn't they make the cap a little bit lower then? I mean, you would say if you already have that proof from the past that you can cut emissions faster, then you would expect the cap to be lower, I would say. But
I think two main reasons. I think one is because there's this market stability reserve that's actually designed to address the same problem. So I can imagine that some people think we don't need to bother with the cap too much. We have the MSR that will fix the problem for us, which it does to some extent. Secondly, because if you lower the cap, because of the design of the system, that also impacts a lot of other things. One example I can give is the number of allowances available for free allocation. Yep. If you make the cap a lot smaller, you'll also have less allowances available for free allocation, and so you get a higher chance of the triggering of this cross-sectional correction factor, and that triggers concerns with industry and policymakers.
The number of free allowances, that's a percentage, right? So
that's a percentage of the cap, so if your cap is lower, then also your number of free allocations will be lower.
I understand. Let's dive also into the conversation with your colleague panelists. And we also have panelists joining online, so I think it's good to also now get them on the screen. I would like to introduce Pieter Liese. He's a group of the European People's Party, the Christian Democrats in Parliament. Pieter Liese, are you here joining us? Can we see you on screen? Not yet. And also Jos Delbeke, he's a climate expert from the School of Transnational Governance. Jos, can you hear us, see us?
Yes, I can see you, and can I hear you? And I wondered whether you were seeing me and hears me.
We're seeing you, and we're also hearing you loud and clear. Maybe we can switch up a little bit the volume for us to hear you even better, because it's a little bit soft. Where are you, Jos? Where are you? Are you at home, at work?
No, I'm not at home. I am in Florence, and I'm teaching. I have a full program today also on the carbon market and on the removals and land-based removals, a debate that is coming up. But to have listened to Pieter-Willem and to the study, which I found fascinating, and eager to come back to my comments when you tell me that I can come in.
Yeah, you can already start, because we're also waiting for the other panelists to join. Maybe right away, what is your first response? What speaks to you the most from the presentation from Pieter?
Well, I think, first of all, this is a great study. We need more analysis of this type. I think this is extremely useful and informative for the negotiations now starting between the institutions at the EU level. So a very timely and a very useful study. I have to say, and one of the questions that were raised to me was, I was around for more than a decade on the ETS. Before, what is surprising you was one of the questions with what we observed today. And that is, of course, the price level that we are seeing today. That is much higher compared to what we thought we would be at this point in time. But I go to that in a minute. I also would like to say that I agree very much with the concluding comments of Pieter-Willem that the modernization and the innovation fund are going to be very important drivers for two reasons. More allowances are going to these funds, and these allowances are worth much higher compared to what they were before. So I think that's a very welcome development, and that's exactly one of the reasons why the Commission ever started in looking at an ETS. It's the price effect, but the revenue effect is now becoming very important. And that comes to the two comments I would like to make on the study. And the first is that in the supply-demand analysis, that analysis is very quantity based. And I'm wondering what is the corresponding price reaction going to be on the market. And on that, I'm rather hesitant with the main conclusion that Pieter-Willem is drawing, namely that a surplus is going to increase at the end of the period. I would say this is rather counterintuitive because the prices today are much higher compared to what anybody expected before. We see also upheaval on the energy markets. We see the use of fossil fuels going up, and what is a little bit horrifying is that even the use of coal in Europe is going up again. So when I look at energy markets, and the prices is not going to fade away overnight, contrary to what many of us expected. So we will see a very high demand for allowances, and the amount on supply is going to go down, as Pieter-Willem was indicating, quite significantly. So
maybe Jos, we can
this
tackle this
begs
first
my question.
Yeah.
Yeah, do you hear me? Yeah?
Yeah, I hear you. Maybe we can already have a response, and then I'll come back later to your second comment. Is that all right with you? We do it in
Okay,
the,
go ahead. Go
Perfect.
ahead. Yeah.
Yeah, I've heard Mr. Delbeke's comments. Indeed, the surplus, I think, first of all, the assumption is that emissions will decrease in line with the objective in a linear way. If you do that, then you see an increase in the surplus. Question is, will that also put pressure on prices? There, I think the answer is more difficult. Why? Because I think, and that's also what we see happening today, for the first time since the ETS was created, the market is more anticipating longer-term trends. And what we expect is the surplus to increase again towards 2029, but then it starts decreasing again. And even if it increases to a level of 550 million, which is still high, but not as high as we see today. And afterwards, it starts decreasing again after 2030. So indeed, it could be, if the market anticipates these shortages after 2030, that the price will still be on today's levels or even higher, even if you have this increase in surplus. I think what we wanted to say with the report was not that this surplus is a risk for the price signal, but more that it could, it decreases the guarantee that you're actually on 55% less reductions by 2030 EU-wide. So it could be that you still have a quite high price signal in 2030, which is a good thing if you look at the longer term. But at the same time, emission levels are not at the level where they need to be to make sure that you're at the minus 55% objective. That's more the message that we wanted to give with the report.
About price is something I always wonder. Does at what price of CO2 does it actually cover the social costs of CO2 and environmental costs?
Yeah, there are studies done on this to see what is the social cost of carbon. I think one report that we often refer to is a CLIMACT report done in France for the French government. And their most recent assessment said that by 2030 you need prices of up to 250 euros per ton to be in line with the 1.5 degree objective under the Paris Agreement. So indeed today we are already at quite high price levels, but if you really look at the social cost of carbon, according to this assessment, it still needs to be a lot higher than where it is today.
Can a drop in the CO2? Yeah, of course, Jos.
Yeah,
Good.
Can I come in?
Of course, come in.
As an economist, I like, prices that are mentioned, 250 euros per ton. But, is this politically realistic? That's one of the questions we have to ask ourselves today. As I said, we are at the price level of around 80, 85 euros per ton. This is very much in the neighborhood of what Stern and Stiglitz said we would have to be. I know economic modelers are easily talking about 200 and 250 euros per ton of carbon, but I would not think that these are price levels that are politically, very easy to deal with. We already see in parts of Europe, in particular where coal-fired power generation is important, that there is quite a bit of upheaval brewing. If we look at what is happening on energy markets, I think, I weigh my words, but price levels of 250 euros per ton of carbon are, I think, very difficult to sustain. And so should we not reverse our question? And that's building on my comment that I made before. I have seen your slides in which you are predicting that the surplus is going to increase again after 2026, but nevertheless, you are already making suggestions to cut down the amount of allowances earlier than 2026. You are toying or suggesting that the one-off cap adjustment that is going in earlier would be more drastic. I would be extremely cautious with that, to be very frank. I also read and heard you saying that lowering the MSR thresholds could be an option. I think that's politically dynamite. I think if we would go for that in the current negotiations that are about to start in Council and Parliament, I would be very cautious to mingle on that. I even would say, I'm hearing other voices where people say we have to expand the amount of allowances available. I hear reports saying we have to open up the market for offsets. I'm not saying today we should do that. Let's not understand me wrongly, but you are pleading for a further tightening of supply, while I think what we are hearing in the negotiations that we should expand supply, which is quite a different kind of political conclusion that you may take on your analysis. So again, I'm not saying your numbers are wrong. I'm not saying that. The flip side of your numbers is, of course, that there is a price impact. And I'm questioning the political viability of these prices in the current negotiations that are going to be very difficult. So sorry to have been long on that, but I think it's a very fundamental element, that we are going to see a heating up of the negotiations on the ETS.
I think that's a very fundamental question that's being raised. If you don't mind, I'll also come back to you, Pieter, but I want to maybe ask Sabine to reflect on this tension, maybe between tightening the supply and the political consequences it might have, and on the other side, of course, the climate reality that's also right in front of us, that if we're not doing anything or we're not ambitious enough, we're going to catastrophic climate change, but you also have the political consequences. What is your view on that, on everything that Jos just raised?
Well, I think we shouldn't preempt.
And I'm sorry, I need to introduce you properly. You're the Executive Director of Carbon Market Watch. People are like,
indeed, indeed.
Sorry.
I think we shouldn't fear the political consequences before we have discussed what is necessary for the climate. And the key message from the CLIMACT report is that the EC proposal, as it stands, still holds the risk of delivering a lower emission reduction than the EC is projecting. The risk is that it could only be 57% because the instruments, the parameters of the ETS are not tweaked sufficiently by the Commission proposal. So that's below the 61% that the European Commission is aiming at.
So you're more concerned we're not meeting the climate targets.
Indeed, and we are currently, if you look at projections under the current ETS, You can find them in the latest European Environment Agency report on the carbon market. Member states predict in total that emissions from the sectors covered by the ETS will only reduce by 41 to 48%. So there you see what the gap is, and it tells you that the ETS tool definitely needs sharpening. And at Carbon Market Watch, we've even been critical of the aim that the European Commission says. We said, say 61% is not enough. It should actually be 71% that the ETS should contribute in reductions to the overall goal, because we also question the veracity of the overall goal of minus 55%. We think that should be minus 65%. It might be futile to mention it because it's, of course, written into law now, but let's consider the bigger context, what all countries in the world have to deliver, and the call on all of them to reduce emissions and to even top up what they've promised with their last nationally determined contribution in the next round.
55 is already a political compromise, but when you actually look at the climate data, our ambition should even top that.
Indeed, indeed.
Okay. But how then you look at the concern that's also being raised, how people will respond in different parts of Europe? So, for example, something I read that under the new ETS proposal, also buildings and transportation will be included, which might have an effect also for the daily livelihoods of many people, because prices will rise, and it might create social unrest or backlash. How do you look at that?
But that's a separate discussion. We are in the first instance here looking at the ETS as it is, and as it is covered by the current Commission proposal. And there the challenge is to reduce the emissions of energy-intensive industries. And that's a challenge that we have not met so far. In the whole history of the ETS, this challenge has not been met. We've got significant emission reductions from the energy sector, but not from the energy-intensive industries, and that's the challenge because that's a very large chunk of emissions.
Okay, that's a very clear statement. I want to move also to Paul van Dam, who's on the right hand of Pieter. Climate Attaché, that sounds very fancy. A permanent representative of the Kingdom of the Netherlands, which I'm also part of, to the EU. Maybe your first response could already be on the discussion, or maybe first on the model that Pieter presented.
Yeah, thank you, Talitha. First of all, thank you very much for having me in this discussion. I think it's extremely timely. Of course, we've seen the Commission proposals coming out July last year, but it takes a while to really get down to business. We've seen that in Council, where first you have a long back and forth with the Commission to actually understand what's being proposed. And now actually the European Parliament is going far ahead of us by already proposing concrete changes, which I'm sure we'll hear about in a minute.
What is sort of the sentiment in the Parliament? Is everybody fully on board with this new proposal?
So I think that's probably better directed at Mr. Liese.
Yeah.
In the Council, I think we've seen a lot of discussion, as I mentioned, to understand what the proposal actually means. And I think, therefore, this kind of analysis is extremely timely because, of course, as Mr. Delbeke mentioned as well, we have the Commission impact assessment, which is very thorough, very detailed. Member states are doing their own homework, but to have kind of independent analysis to see what the different parameters in the ETS actually do to the system is extremely useful, because it is a very complex system, and it's hard to see, even as policymakers who are relatively well versed in this topic, to see if you switch these parameters around a little bit, what does that actually mean? So I find that extremely useful. And I think our colleagues back in The Hague will definitely look into the model and play around with it a little bit to see whether their assumptions actually are true as well, and to check that with their own modeling. So,
what is from the point of view of the Netherlands, what are the priorities that the Dutch have when it comes to this legislative proposal?
Yeah, so I mean, I'm sure you're very, very well aware that we have a new coalition agreement now. It's fairly ambitious on climate.
Finally have a government.
So the EU objective that's now written into law of at least 55% emission reductions by 2030. We're going to have that as a national objective as well. But to make sure we get there, we're actually going a step further. So we're going to be developing measures to get to 60%. Because we always know that there's going to be pitfalls, there's going to be things that don't exactly work out as planned, and we really want to make sure that we make headway. And to kind of keep up that momentum, the coalition agreement also mentioned an interim target of 70% by 2035 and 80% by 2040. And then, of course, a climate and transition fund of 35 billion over the next 10 years to actually make sure it gets implemented as well. And then, of course, I think it's important to see how does this match with the Fit for 55 package. And there's not that much detail yet in the coalition agreement. We're still looking into how does this translate into our position. But I think the kind of general principles that we already expressed probably are still valid. I mean, the system, first of all, needs to make sure that we get to at least 55% by 2030. So it needs to be consistent. It also needs to be cost efficient because, of course, this is going to cost a lot of money and we can only spend every euro once. And at the same time, we know all sectors and all member states need to do their fair share. So that kind of convergence of efforts is also very important. That means, I think, that there's a crucial role for the ETS to be played in this transition. We think it should take the lion's share of emissions reductions. The Commission has proposed that, but we think there might be room for even a larger push from the ETS because it's a system that works, that's demonstrated how it can drive this transition, which we've already seen in the electricity sector.
How did you then listen to Sabine saying that so far under the current ETS we have also not reached the reduction in emissions that we wanted to, and she's also quite concerned for the very energy-intensive industry under this new proposal that will actually make it our climate ambitions. How do you see it? We have in the Netherlands a lot of energy-intensive industries, big industries. How do you look at that?
No, that's an extremely valid point. I mean, we've seen that the kind of cost-effective reductions in the power sector have gone far ahead. Of course, they've had a stronger price signal because of free allocation. So that, of course, is a longer-term challenge that we need to see how can these industries now join that transition while ensuring that we don't get carbon leakage. I think the carbon border adjustment mechanism has an important role to play here, but also see like what kind of drivers do we need from the ETS to make sure that that actually happens. So I think that means for the system that it needs to not just be fit for 55, but also fit for 2050. It needs to kind of give that long-term signal that for investors and industry, that this is not just something for 2030, but it's something for the long haul, and that we actually need to speed up this transition. And I think then you'll see this will be an extremely strong driver for industry to start making this transition as well. And an ETS system is crucial for this. It's not the only thing. Carbon price alone won't just magically make things happen. We need to look at the infrastructure. We need a lot of investments in new technologies, in grids, in enabling factors, as it were, in the broader sense, to make sure industry can make this transition. Yeah. But the ETS is definitely an important driver for this transition.
Thank you very much. That's very clear. I heard that Pieter-Willem is also online now joining us. Maybe he missed part of our conversation. I hope not the biggest part. Maybe welcome, Pieter-Willem.
Good morning. Hello.
Good morning. Thank you so much for joining us. Maybe to pick up where Paul also left, how important is the ETS when you look at the bigger Green Deal and meeting our 2030 climate target? How important is the ETS within that?
Yeah, thank you very much for the invitation, and sorry for not being with you in the beginning, because you can imagine as a rapporteur for ETS, I have a lot of invitation, and I was in another video conference exactly on the same topic. I think the ETS is crucial. Without the ETS, we will not make it. It has been mentioned that in the power sector, we had dramatic reduction of emissions. You know, I was around when we suffered, Delbeke knows it, that the carbon price was going close to zero. And against a lot of resistance, we did interventions, the backloading, the MSR, and then the review of the ETS. And then the ETS started really to work. And the main reason why we have dramatic decarbonization in the electricity sector the last 3 years is the ETS. There are, however, other conditions. Without renewable energies, we will not be able to decarbonize the power sector. That's why this policy mix that the Commission always claims is so important. And I think the same applies for other parts of the economy. In transport, we have a dramatic increase of emissions, when at the same time in the power sector, emissions went down. And there are many reasons, but one reason is that we didn't have a proper carbon price in transport. That's why I think it's so important that the European Commission made this proposal and that we are working on it and try to improve it. So I wouldn't say the Commission proposal is perfect, but it is an important element. And also here we have the question of the policy mix. If we have only a carbon price, no alternative fuel infrastructure, no CO2 cars, we will have a lot of problems. But if we apply the same strategy then in the power sector, I think we will have similar success. And that's what we need to do. You know, our target is very ambitious. When we look at the figures, the rest of the world emitted more since 1990. Europe went down 25%. So we are the best in the world, but still by far not enough. We need to quadruple our efforts. In the next 8 years, we need to reduce 4 times more emissions per year than we did between 1990 and 2020. So this is not an easy operation, and that's why we need this policy mix that is successful in the electricity sector for all sectors.
A concern that was raised here, not by all to say, we have also had some disagreement, and we'll, I think, pick up on that, because it's always good to have a discussion instead of that everybody agrees always. We were just talking about, I don't know if you already were part of the conversation at that moment, about why the cap until almost 2030 remains above emission levels, and the concern that we might not reach the emission reduction that we need. How do you look at that? What was the reasoning behind this?
In my draft report, I follow very much the Commission proposal when it comes to ambition. I changed the Commission proposal very much when it comes to targeted support for those that innovate, and a more strong stick. So more carrot for those that are really on the right track, and more stick for those that are not. But I don't change the overall target, because I think the Commission made the proposal in line of the climate law. I was around when we, with the colleagues, Jutta Gutteland and others, and Vice President Timmermans agreed on the climate law. At 5:05 in the morning, we agreed on 55, and the Commission proposal is in line. One could say that is not enough, but especially after Glasgow, I think there is a lot of ambition in the rest of the world. We have a lot of commitments to carbon neutrality, but there's nobody else from the big emitters, from the real game changers, the United States, Japan, Australia, China, that has similar ambition. And all those didn't reduce their emissions since 1990. So to say it's Europe that should still increase the ambition, I don't think this is fair, and that will not do the trick. I think what we need to do is to have a realistic proposal. That's why also the policy mix between CBAM and free allowances is important to avoid carbon leakage and to push the rest of the world in the same direction. And that's why I didn't propose a change when it comes to the ambition level.
May I come in on it? I think that's,
you can all come in at any point. So
that's indeed a very important point that Mr. Liese makes there. He leaves the ambition level as proposed by the Commission untouched. He does not make any proposals for tweaking the parameters of the ETS any further. He doesn't make any further proposals for the linear reduction factor, the MSR, the one-off cap reduction. And the CLIMACT study shows us there is something to be looked at again, because as the study demonstrates, the risk is still that the ambition isn't high enough and that it will deliver under the aim of the European Commission. So as was pointed out, the study, the model is there to be deployed, and I hope that others in the legislative process now will look at the study and will deploy the model to make more ambitious proposals for the parameters to deliver, to make sure that... Could you say,
like, what would be your main proposal, the main change that you would like to see?
Well, I mean, as Carbon Market Watch, we simply call for a more effective combination of the adjusted linear reduction factor, the one-off cap reduction, and a greater increase in the intake rate of the MSR. Now, CLIMACT puts that slightly differently and calls in particular for a greater lowering of the MSR thresholds and for a stronger cap adjustment. I mean, you can play around with those factors and come to different results, but there is definitely something to be looked at, right? Looked at again. The CLIMACT study in that sense is an important complement to the impact assessment of the European Commission, and it must be employed, it must be used in the legislative debate that is going on now.
Jos, I will come to you. How do you, and honestly, how do you look at the free allowances for the heavy industry that are also still?
Oh, there you're asking me about our favorite topic.
Because I was triggered by Peter who said carbon leakage, and I was like reading into this, like you have all these studies also saying that, I know in the Netherlands, we also talk a lot about industries are threatening to leave the country, and then if you look at all of these reports, it really shows that it's very unlikely for industries to leave because of a higher CO2 price. I was interested in how you look at that, because you didn't mention it in your priorities.
Well, our position at Carbon Market Watch is clearly that they have to be abolished. Now, under the Commission proposal, they're going to be reduced. To us, this ambition is not big enough. We are in favor of eventually of a total abolition of free allowances. What we have to keep in mind there is we've had free allowances all along for energy-intensive industries, worth hundreds of billions of allowances, and they have not delivered. They've protected those industries, but they have not delivered the emission reductions in return. So as a tool to deliver emission reductions, they clearly have not worked. Yeah. We need something else in place there. And instead, what's worse, that's also noteworthy, they've actually made windfall profits of the order of about 50 billion euros between 2008 and 2019, which is well documented. So there are important facts there to really rethink free allowances. And in terms of rhetoric, in terms of what's always being brought into play as arguments, we really have to look again at the scaremongering that effectively happens there. We must end this scaremongering that there is going to be relocation of production or of investment if the carbon price really begins to bite, because the story isn't as simple. Companies do not just relocate because of the carbon price. There are many, many other factors at play. So instead of that blanket protection through free allowances, we need targeted support by deploying the revenues of the ETS to support the decarbonization of those industries. Yeah.
I saw Jos already sometimes nodding, but sometimes also disagreeing, so I'm very curious.
Well, I agree with what has been said on the free allocation. I think the current price levels we are seeing on the carbon market has let grow that amount of money that is going under the heading free allocation to companies is really incredibly high. And I think that what I see in the Pieter-Willem report, kind of bonus-malus system for those doing better, I would even say perhaps we have to rethink the free allocation system. How can we accelerate the transition towards a much lower carbon economy, in particular in the hard-to-abate sectors? And I think that there are good elements. I also noticed last week that CEPS has been producing a report and suggesting the creation of a zero carbon benchmark against which some of the free allowances would be given, provided that companies are doing major investments, breakthrough investments in low carbon technology. So I think on free allocation, indeed, this is a very valid debate to be had. I think it is now overly generous. There is even a kind of overcompensation growing. And I think that Europe should better look at, for this debate coming on the CBAM in the World Trade Organization, where people are say, look, is this not just open subsidies? And I think that Peter Liese in his report makes a good and very useful step in that direction. Also, the Commission makes steps in that direction to continue with some free allocation, provided there is an investment done in breakthrough technology. But I would like to recall, nevertheless, now that Peter Liese is on the screen, with the argument that I made before, to be very considered and very cautious with playing around with the further lowering of the MSR thresholds and with a further tightening of the one-off cap adjustment because of the prices we are seeing. Because I'm disagreeing to some extent with Sabine, saying that the social context is another debate. No, it is part of this debate. And we know that, of course, the energy prices we see today for gas and electricity cannot be attributed to the ETS, but there is a part of it, say a fifth or 25%, that comes from the carbon market. And some member states, normally in the East, where power generation is heavily dependent on coal and lignite, it's a very important element. So let's not forget about the quantitative analysis, that the real life impact is a price impact. And what we are seeing on energy markets today worries me, because it could complicate the political negotiations that we are going to have. And for that reason, I would totally support what Peter Liese has been saying. Let's not tighten up the targets further, because they are already very tight. And the price levels that were mentioned at the outset by Pieter-Willem of 200 and 250 euros per ton of carbon would create quite a huge problem for the negotiations on the ETS and on the Fit for 55 package in general. So to sum up on the free allocation, yes, to be much more creative on the tightening up of the cap. I would call for caution. Thanks.
Yeah, of course. Yeah, and then I will come to Peter to respond on those two things: free allocation and the price impact. I will keep that in mind.
All right, thank you. 4 points I wanted to make on this. First of all, by no means do we intend to say that the EU should go beyond the minus 55%. So it's not about tightening the targets. It's more like, is the instrument as it is proposed now, does it guarantee actually achieving that minus 55%? And their conclusion was that it does not guarantee it.
It's about achieving your own targets.
Yeah, and it's about achieving your own target. Yeah. Also, we by no means did I intend to say that we should strive for 250 euros per ton carbon price under the ETS by 2030. That was not the message that I wanted to give. I think the prices are a concern, a social concern. I totally agree with that. I think, I fully understand that policymakers need to be aware of this. But on that point, I think price levels are today are no guarantee for price levels of tomorrow. We know that price levels under the ETS can be quite volatile, that it has made movements that we did not expect in the past, and that price levels today are, at least to some extent, driven by also exceptionally high gas prices, which might not be as high in 5 years' time. So, last point I wanted to make is indeed one of the options that we see of better ensuring that the tool can ensure the minus 55%. We mentioned 2 options. One is tightening the cap in the beginning more. Second option, and both have their advantages and disadvantages, is letting the MSR thresholds decrease. Why is this latter point at least something worth thinking about? According to us, these thresholds were set in 2015 based on the hedging demand at that time from a power sector which was much more reliant on fossil fuels, and also on a market which also included the UK, which at that time was not a small member state. In 2030, the UK will have left. The power sector, that's at least the aim, will have decarbonized quite a lot. So I think it's a genuine question to ask, do we still need this kind of surplus in the system to cover hedging demand in 2030 when comparing the situation to 2015 when these thresholds were decided? And even if you look beyond 2030, in 2035, do we still need a surplus, which is 1.5 times the amount of the cap? Or does it make sense to have these thresholds evolve in line with the cap? I think there's definitely some arguments for the second case.
Yeah, maybe it's good to go to Pieter, Liese, and I think I'm gonna make Pieter respond to three things, because maybe first, what you said about tightening the gap to reach our own emission targets under 55. The model is clear on that sense. That's the science saying, there's a risk that we might not get the expected emission drop that we want. How do you respond to that, Pieter? Oh, you have to unmute.
Yeah. Should I answer all the three questions that you raised?
Exactly.
Not only the last one, I guess. Yeah. So first of all, I think we need to be careful in saying there is no carbon leakage, because there is, of course, an unprecedented step that we are doing in the ambition level, and that we cannot say there was no carbon leakage in the past, and that's why there will not be in the future. It's unfortunately true that we have windfall profits, and Jos knows how much we fight it against this windfall profit in the electricity sector. And one thing that is outrageous for me, that we still have free allowances for some countries in Central and Eastern Europe in the electricity sector. This has to be abolished tomorrow. I was against it already in the last review. So there have been windfall profits, but in the new system, there will not be windfall profits, because it's just much more ambitious. And we have a lot of shortage already for companies that are not willing to invest. And those that are willing to invest, those are the ones that we should reward. So I'm really looking forward to even improve this system, but to say there will not be carbon leakage, there is no problem. It is a very optimistic view, and we will not be a good example for the rest of the world if we decarbonize Europe by deindustrializing Europe. So we need to make it without a deindustrialization, and that's why we need to be careful. I'm willing to talk, Mohammed Shahim has made a very ambitious proposal on CBAM that will not fly. But if we have an intelligent proposal that allows us to advance the CBAM and to advance the phasing out of the free allowances in a coordinated way, and maybe a compromise is possible, but without carbon leakage protection, we may create a disaster. And I fully agree with what Jos has said. There is, of course, an issue with high prices. And I'm a bit surprised and sometimes also frustrated that the same people that say, oh, we need to be careful, there are social issues in ETS 2, they don't see the social challenge in ETS 1. If we increase the price further, of course, there is a challenge for low-income families in Bulgaria and Romania with the electricity price. I fully agree. The main problem with the electricity price is the gas price, and we need to target that. And that's why we need the Fit for 55. It is a reason in favor of Fit for 55. More renewables, more efficiency will decrease our dependency from Russia. And a very good colleague of mine in the EPP group who knows Russia said that, of course, Russia is against the Green Deal. They want to keep their business model. Putin and the oligarchs want to have Europe being dependent on gas also in 20 years. And that's why they are manipulating the market now. They are not delivering as much as they could. They are just delivering as much as they must. Even they could earn a hell of money now and use it for future-proof investment. They don't, because they want to keep the business model. So there is a lot of other reasons, but a CO2 price that went up higher than 90 euro will, of course, increase the problem. And that's why be careful with just say we should increase ambition in ETS 1 and ignore the social issues. The social issues are already there, and they must be addressed, and they must be taken into account, not already in ETS 2, but also in ETS 1. So, and I'm convinced, after looking at all the analysis, that the Commission proposal is fit for purpose. If somebody proves me wrong, of course, I'm willing to look at this. I know that a lot of shadows want to increase ambition, but what I don't want is that people think the solution is easy. We don't need ambition in ETS2. We don't need ambition in transport and heating and process heating and all the other issues. Let's just improve ambition in ETS1. That is not serious because all parts of the economy need to decarbonize, and carbon pricing is important in all parts of those economies. I think we need to look at this systematically and address the social issues also in both parts. Thank you.
How would you, I think it's very clear, and I think we're going to follow up on the social aspect as well, but I didn't hear you, if I'm correctly, respond to what Peter said in terms of, despite of raising ambitions, so that's also the discussion we just had, do we need to, from a climate point of view, raise the ambitions? But apart from that, within this ambition, with the current ambitions, with the current targets and the proposal, if we don't tighten the gap, as you explained it, there will be a risk that we won't reduce our emissions sufficiently. So how do you respond to that?
Yeah, what do you mean by sufficiently? In line with the climate law or in line with other considerations? That needs to be clarified because for the climate law, I think I answered, but did you mean something else?
Yeah, Peter, could you?
It's in line with the climate law. So the system as it is now does not guarantee, in our point of view, and it's not by much, but still it does not guarantee that the ETS will do its share of ensuring that in 2030 emissions will be 55% below 1990 levels. There's still a bit of gap.
I answered to that question, but maybe not clear enough. I trust the Commission in their analysis that this is in line with the climate law, with our net 55% proposal. If you have different evidence, I will discuss it with the Commission. And of course, I'm committed to the climate law, but the evidence that I saw from the Commission is different from the evidence that you have obviously seen. And of course, you can look at the figures from a different perspective. And as I said, some of my shadows are anyhow for more ambition. This has to be discussed. But I also want to clarify the other point again. It is often said that, the European climate law is not in line with the Paris Agreement, with the Paris target. Of course, this is from a perspective that sees the European target very much in isolation. And it's clear that climate change cannot be addressed only in Europe. It's a global challenge. And that's why it's so important that we strengthen climate democracy, that we are better in our all-over policy to convince third countries. But for example, if you compare the very ambitious United States target for 2030, the per capita emissions in the United States will by far be more than in Europe. If the US would go to the per capita emission of Europe, they would immediately reduce their emissions by more than 30%. So the question is, who has to deliver the additional ambition can be seen from a different perspective, and I'm willing to discuss everything. So this challenge is so big that nothing should be excluded, but just to say it's not enough for 1.5 excludes the responsibility of the rest of the world and the fact that Europe is only a part and cannot decarbonize the world alone. So that's why a really clever mix of all these policies is crucial.
Thank you. Jos, before I come to you, I think it's fair to give a response to you because that's a little bit puzzling to me that Peter is saying based on the models, projections I've seen from the Commission, I don't see the same concern as what your model has pointed out. Did you discussed your model with the European Commission? How do you explain that that different view?
Yeah. I didn't discuss it with the Commission directly yet. Would be happy to do so. What we see is that if you look at the Commission's impact assessment, the part on the MSR, that actually what we are suggesting in our report is very much what they're also exploring in their impact assessment. But if you look at their proposal, that it has an approach which they didn't include in their impact assessment. So the eventual proposal that they made, they didn't include this themselves in the impact assessment. So I haven't seen the figures of the Commission on what they eventually proposed, because what they included in their impact assessment with the figures is actually very much in line with what we are suggesting, which is, and that's several options that they looked into to have these thresholds on the MSR decline in line with the cap. That's also something that they looked into themselves, and if you just look at the impact assessment, it actually comes out in favor as the most preferred option, but it's not the option that ended up in the proposal of the Commission itself.
Interesting. I think that will maybe spark a little bit more debate. Jos, you were waiting already a long time to, you're not Jos, you're Paul. You were already waiting a long time to jump into the conversation.
No, I think it's a very, very valid point that Pieter-Willem makes, because I think the assumption is always, well, if you adjust the cap, the target will just magically be met. And that is, of course, the core of the system. But of course, because we do have a budget approach, there are fluctuations that we need to take into account. So although we think the Commission proposal is fairly elegant when it comes to the combination of the one-off rebase and the linear reduction factor, I think the MSR parameters is definitely something to look into further. And we definitely see the need to keep up a stronger market stability reserve for quite a while, because we see that it has served its purpose to reduce the oversupply in the market. And we see there's a continued need to keep doing that for the next few years. So therefore, we think the kind of intake rate, as it's called, of 24% should be a minimum. But perhaps we need to look at the other parameters as well, and perhaps we need to monitor that over time to see whether the potentially different assumptions that Pieter-Willem's study has to the Commission actually play out in practice. Sadly, I must say, in the Council, the debate, as already being alluded to, is going a bit in a different direction, partly because of course, the energy prices discussion, where people are getting increasingly concerned that this will hurt competitiveness, it will hurt citizens. So I think it will be tricky to get the Commission proposal through, even as it is, unscathed because of these worries. And I think it's probably worth emphasizing that, of course, even though the increasing energy prices is an issue, the relative component of the CO2 price is actually fairly limited. And if you want to make this transition happen, actually in the long term, we need the ETS to be as strong as possible to drive that transition. And that will actually in the long term also help us solving the energy issue and the dependency, of course, that we still struggle with.
But are you saying then that the fear of the rising energy prices should not slow us down in our ambitions? It's something to consider or to...
I'm not in any way trying to invalidate concerns, but I'm trying to caution against changing the system that now finally shows us it works, and then potentially risking throwing out the baby with the bathwater, as you could say. Of course, we need to look at how we can mitigate impacts. I do agree with the point made earlier that carbon leakage, even though it hasn't happened now, and perhaps was a bit overly generous in the past, is not necessarily a guarantee for the future. So we need to make sure we target it better, actually focus it on where it's really needed, and ensure that we have a different system so we can phase that out later on. And I think the carbon border adjustment mechanism is a very promising first attempt to do that. But there are issues to get that right, partially because of exports. But we definitely need to focus it on where it's needed, because we know the amount of free allocation in the system will go down anyway. So I think it's very interesting to look at where do we absolutely need it and where we can we over time phase it out. I think that applies to other sectors as well. And then finally, the other proposal made by CLIMACT with the cap and the rebase. I think, in my mind, the elegance of the Commission proposal is as well that you have a linear reduction factor that is fit for the long term as well. So that provides a stable reduction well into the future, so that in theory, you would not need to tweak it again later on. I think if you would have a
This is with
higher
the 2050
one-off,
in mind.
yeah, exactly, and then a lower linear reduction factor, you
Yeah.
would of course need to put it back up after 2030 to make sure you reach the target in time. So that's maybe something to be considered. But I think that with the Commission proposal as a basis, we can definitely see where further strengthening might be needed.
Thank you. I see a lot of questions also popping up on the screen, which makes me very happy, which means that we're not just sitting here with each other, but there are actually people watching. That's a very good sign. Keep that up. I'm going to ask all your questions right now, but first I want to give Sabine also a remark, because you're already jumping on your seat.
I want to come in on that carbon leakage debate again, because what does that tell us? It tells us just that we have to be concerned about the competitiveness of our industries, but then how we ensure that is a different matter. We maintain it shouldn't be through free allowances, but it should be through targeted support, and the ETS holds part of the answers in form of the revenues. The revenues of the ETS should go into the Innovation Fund and top up that budget by a much greater factor than it has been topped up between the phase 1 of the Innovation Fund and phase 2. We have to think of free allowances as foregoing revenue, and if we don't have the free allowances, we have that in revenue to deploy for the transformation of industry and to make eventually a decarbonized industry in Europe globally competitive, because we're not alone in that challenge of decarbonizing industry. It's all the countries that have to adapt climate targets have to look to decarbonizing their industries, and that's what our industries will be competing with. So it's better to have this targeted support than blanket protection, which doesn't necessarily lead to the transformation that we need.
Do in your view, the revenues of the ETS so far, have they been sufficiently spent on tackling climate change? If you look at how they've been spent so far?
No, they have not. I mean, there are some improvements in the pipeline, like the Commission proposal mandating 100% deployment of revenues for climate action, which wasn't the case so far. And although we've heard that the allowance volume will go down, it won't necessarily affect revenues, because we're also dealing with a higher carbon price. So there's some compensation, but the revenues can certainly still go up with more abolitional, phasing out of free allowances.
Very clear. I'm going to, let's start with the first question, but to who is it addressed? That's always good to know. To who is this question? Peter? Yeah, it's to you. Didn't you assume a 62% reduction in the modeling? So how did you get to 50?
Yeah, quite technical question. So we looked at both emission scenarios. So we looked first what happens if emissions are effectively reduced by 62%, and then we saw this surplus increasing again and remaining at about 550 million throughout to 2030. Then we looked how much less does the surplus allow you to reduce? So we looked at how far can we push emissions and still have some surplus on the market. So we did a second run with the model where we looked at, okay, emissions are only reduced by 58%, and there we saw that we still have a positive balance in the system by 2030. Very, very small, so it's only 30 million allowances. So also in the report, it's clarified that this is a most extreme scenario. But we looked at how far we could push the system and how much emissions maximum you could still allow under the system as it is proposed by the Commission. Yeah. So that's the difference between the 58 and the 60%.
And then the second question, will the economic impact of a CO2 price not become much lower when our economy becomes less CO2 intense?
I don't know if that's a question addressed to me, but I'm happy to answer it. On one hand, yes, of course. On the other hand, look, it also depends on what the price levels are of the low carbon alternatives. So if you push a CO2 price up to a level that is just replaced by a low carbon alternative, then still the economic impact can be quite big, because your low carbon alternative also requires money. If, however, and that's why we really like from CLIMACT side this modernization fund and this innovation fund, if you can at the same time lower the cost of your low carbon or zero carbon alternatives, then in the long run, of course, you can expect competitive advantages there and less costs there. And I think that's also the future that everyone within Europe is aiming for and is working towards.
Yeah, something I was wondering that's related to this, but it's maybe a totally personal question, but is it true that in Europe, much of the policies aimed at reducing our CO2 emissions are that there used to be a more variety of policies, and also that were more binding to member states, for example, for renewable energy, and that we now are focusing more on making ETS like the big system to where we depend on reducing our emissions. Is that a correct way of seeing it? That the ETS has become more important in reaching our climate goals in Europe?
I think in terms of the power sector, definitely yes, because there we no longer have this nationally binding renewables targets, so there definitely. Within industry, I think, and it's also been discussed already, I think it is finally becoming the instrument to drive down reductions. We now have a decent price signal. We have also a lot more support for innovation in those sectors because they need this also. They don't. I think that's the big difference between power and industry. That the technologies in the power sector were a little bit more mature than they were in industry, but now we see them industry sector catching up.
But is there like a climate risk in the sense that if that price mechanism somehow, because there are always other variables that influence it, that it might fail to give us the result when it comes to tackling the climate crisis, that we depend so much on that price mechanism?
Yeah. I understand the concern, and I also understand, especially when you see prices increasing, and I think now what we see is not only the level, but also the velocity with which prices have increased, that everybody's quite scared, and you see already political pressure to maybe ease the system a bit, so there's definitely a risk. On the other hand, if the Commission's proposal is completely adopted as it is now, and I think it's also clear from our report, we don't think it's perfect, but it's quite close to it. It's not that we say that the proposal needs a lot of tweaking, but we do think that it needs a little bit of tweaking to get it right where it should be. Okay. That's the main message of the report.
I don't see to who the next question is directed, but Sabine, yeah, I do see it. And all below.
The question is whether other solutions, like for net emission reductions, like carbon capture and utilization, should be coming in. Yeah, I'm very glad that this is coming in, because this might fly under the radar of normal ETS discussions, that actually removals are, I would say, threatening to come into the proposal. The European Commission in its proposal suggests that carbon capture and use comes in the sense that if a company captures its emissions and the greenhouse gases or the carbon captured is then embedded in products, that those emissions will not be subject to having to surrender allowances. To us, that's really problematical, because it's not looking at the full life cycle of those products. If you take carbon in plastic, for example, yes, for as long as the plastic is used as plastic, it's in there, it's bound in there. But what happens at the end of the life cycle of this product? If it's incinerated, the carbon goes out again, goes into the atmosphere. Even if it goes into landfill, there is seepage. So we would have loved Liese take this up and really ask some critical questions, or put in some extra conditions to also consider the end of life cycle under this proposal. And then what's more, it's Liese who brings in the prospect of removal offsets. He says that companies, there's only one sentence in there without an explanation. I would be curious to know what the explanation actually is. He brings in this possibility that companies can buy offsets from BECS, bioenergy, carbon capture and storage, or from DACS, direct air capture, carbon and storage, instead of buying allowances under the ETS. Yep. Now, there are inherent sustainability problems with both those technologies, but in particular BECS. Then the idea of creating revenue streams, because I guess that's what's behind it, in order to incentivize those technologies, also needs to be questioned. So we haven't got any large-scale BECS or DACS plants in Europe yet. And is the ETS, can revenues actually be generated to incentivize it? For DACS, I think it's highly questionable if we consider a removal offset from Climeworks, the one company we
Maybe
have
we
so far,
can-
costs
yeah.
over €1,000 at the moment. That's not competitive with EU allowances. It's not an alternative to EU allowances. But there is a far more fundamental problem, and that is the reintroduction of offsets into the ETS.
Maybe we
Removals should be tackled
Yeah.
separately rather than undermine
Maybe
the
we
emission
can
reductions.
direct this one to Peter, but first I would like to go to Jos, who's already also been waiting a little while to
Well,
to
thank
respond.
you. Okay, well, thank you. I just wanted to come back on one of the issues that were raised in the chat box. I think, on the free allowances, just coming back on that, I think the basic point I wanted to make is if you concentrate them on what needs to happen now in breakthrough technologies in the industrial sector and the hard-to-abate sectors, then you can allow more emission reductions at the end of the period because it takes some time to see them operationalizing. But I wanted to come back on two specific points that Pieter-Willem was making. He asked the question whether the hedging flexibility that's in the system, whether that is important, and I would say, yes, it is. Because you can have incredible price spikes in case the hedging flexibility would be reduced. There was also a question about the 3% buffer that is there. And I think it is rightly said in the report that this is a kind of backloading. And given the prices we are seeing and the price spikes we are seeing, perhaps we have to think more in terms of front loading instead of backloading towards the end of the period. Now, final word, to pick up the offset comments, there may be offsets inside Europe of high environmental quality, and that would not undermine the reaching of the target. So I think that could be considered. I'm not saying that the offset debate that we have been experiencing in the past was fairly problematic. When the Commission was closing the door for the CERs coming in, where the environmental quality was really minimal, I think that was the right decision to do. But if we look inside the EU, there may be offsets in, for example, in the land-based sector that could be considered, provided they are, well checked in terms of additionality, permanency, etc., etc. So I would not rule that out whatsoever. Thank you.
Pieter, Liese, we have a lot of questions for you, maybe also to respond to the offset discussion. But maybe first, how are you planning to coordinate your work on free allocation and how do I say this? Shaheen-led work on CBAM?
Yeah, thank you. I will try to answer all the questions.
Yes.
First of all, supporting Sabine when it comes to the revenues. I think that is a weak point of the existing ETS, and we need to be really strong fighting as Commission and Parliament that member states do spend the revenues on purpose in ETS 1, in ETS aviation, shipping, and also in the ETS 2. This is crucial to really do the trick. The problem is for companies in risk of carbon leakage, the Innovation Fund and the use of revenues as it is now doesn't give any predictability. And that's why I'm proposing this bonus system, so that every company that invests in decarbonization knows that they have a benefit. So that's why I think we need both. We need the fund, but the fund, it's always, there will be more requests for funding than money is available, and you cannot plan as a company when you do your investment, and that's why we need also a system inside the ETS, including free allowances, not only for the best performers, but for the very best performers. So those that are really going to climate neutrality, they should have a predictable support. Some of these points are already in the Commission proposal, and I would try to strengthen them. Then there are some requests in the chat to discuss also the ETS 2, and I would be really happy to receive more detailed questions here. Just one point, where I think we need to discuss and where my proposal already solves a problem that popped up in the debate. In ETS Maritime, like in ETS 1, we have a threshold. Small boats are not covered because the Commission argues that there is too much administrative burden for small companies to hold the allowances. That leads to the problem that luxury ships are not covered because they are smaller than a big tanker. And that is, of course, creating polemic. If colleagues agree and Council agrees and also Commission agrees with my proposal in ETS 2 to cover all fuels, not only road transport and building heating, but also process heating, also construction machinery, then also shipping will be covered by ETS 2 if it's not covered by ETS 1. So, and then automatically the luxury boats are in. I think this is one of the points which we have to look at, also to increase ambition in ETS 2 can solve some of the problems that we already have. Then on the removals, so I think removals are important, and that's why I made this amendment. We need negative emissions. It's very clear that all the realistic paths in the IPCC scenarios include negative emissions. If we know that, we need to start to incentivize them now. And that's why I think these business models need to start to grow. There may be not enough incentive with including them in the ETS only now, but it's again a predictable source of revenues, and other financial support can be added. And when you say, Sabine, there are some unanswered questions, that may well be, and we need to discuss all the technicalities, but in this very moment, you know, it's outrageous, and nobody mentions this here. The Commission made a proposal on taxonomy, which could be the benchmark for many other regulation, which is absolutely unacceptable. They even include the retrofitting of old nuclear power plants, and colleague Martin Heusing said in Slovakia, they interpret it in the way that we include also Russian-type nuclear power plant. The retrofitting will be in the taxonomy, and member states that use this as a benchmark for their Green Deal, for their climate targets, they are rewarded. And at the same time, we speak about theoretical consequences of this direct air capture technology. So that is like the vaccine deniers. Let's say there is a potential risk of being vaccinated. That's why I don't, and they don't see the existing problem. You know, we need to invest in modern technologies because the existing technologies, including Russian-type nuclear power plants, are just not safe. So let's be a bit more brave on this. Of course, you are right with the loopholes, and that's why I have also a provision here. In the long term, all emissions should be covered by a carbon price, all, including of course, waste incineration. And I'm the one that proposes to include waste in the ETS. And if it is included, then of course, the emissions are counted when they are released again. The problem is that we need to fix some problems before. We need to fix the problem of landfill and the problem of export, where we are not sure that it's treated according to high environmental standards. But we are on the way to fix that both problems with the methane strategy and with the export waste regulation. So I think 28 is a good date to cover waste. And then we have also covered this technologies when they again emit. But there are also technologies that would never emit. You can create bricks from CO2 by direct air capture, and then they have a double benefit. So let's promote these technologies because we will need them when we will try to have negative emissions.
Thank you very much, Peter. I'm also looking around because officially we've already passed our the official time. We were supposed to round up around 12. So I'm looking around if we're still feeling energized, and we still have a lot of questions. So I think maybe my suggestion is to finish some of the we have more time, 12:15. No, it's already 12:15. Okay, so we have a little bit more time, 15 minutes. Okay, so then we're going to finish these questions. Sabine, you wanted to respond to Peter, and I think then we'll just work our way through the final questions and round up.
Mm-hmm. I want to guard against too much mixing of issues. It is clear that we do need removals, and it is clear that they do need to be incentivized. But does that have to be through the ETS is the question, and here our position is no. Removals must come, they must complement emission reductions, but not undermine them within the same system. The removal technologies need to be incentivized through other instruments such as the Innovation Fund. So we need this proposal that offsets should come into the ETS from DACs and BECS really needs some very careful scrutiny.
Can I also see some questions for the other panelists? Maybe we'll go back to Peter later. Yes, so I think this one is again directed to you, Peter. So you mentioned that the modernization and innovation funds will see a large rise in revenue. These funds are to be used to fund further emissions reductions. Is that the case? And have you or the EC accounted for these reductions in your modeling?
Yeah, very good question, to which unfortunately I cannot give a full answer. Like, are they actually being used for emission reductions? We haven't looked into this. My first answer would be yes, but I have to be transparent. We didn't really look into this. Are they included in the emission scenarios that we used? There also the answer is, to the extent that the Commission already included it in their emission scenarios, it's also included in our analysis because our emission scenario is just copy-paste of what the Commission foresaw. I think in the Commission's impact assessment, they expected lower prices, so also lower revenues for these funds. But you would have to ask the Commission for more details on that. Maybe just one point on the Innovation Fund. I think there, the bulk of the emission reductions will actually be for after 2030. Basically, what the Innovation Fund does is it finances demonstration plans, which are often not very large scale. So, but it's to have a proof of effectiveness of a technology. Yep. Once that's proved, that it needs also time to be scaled up at an industrial scale. So that requires a bit of time. So there I would expect emission reductions starting already in the next 10 years, but the bulk of the impact will be for after, once the technology is really rolled out at a larger scale.
That's very clear. To all of you, we're going to go back to the topic that was raised also early in the start of this panel on the social impact of this proposal for citizens in Europe. Paul, maybe to start with you. You could look at the Netherlands, the situation there. We just announced the compensation for the rising energy prices there. How do you look at this topic? Do you think vulnerable citizens are being compensated enough? Is there more to be done? How do you look at this?
I mean, I think it's definitely something that we need to look at across the board. I mean, the Social Climate Fund, of course, is always referred to in the context of the ETS for the built environment and road transport. There, I think we're a bit hesitant to get another fund in place, which to some extent overlaps with the significant amount of funding we already have available under the EU budget, the multi-annual financial framework. But also, let's not forget the Recovery and Resilience Facility, basically the whole recovery package that includes billions of euros for member states to use exactly for these kind of issues, to drive the transition, but also see how do we make it fair and just for all.
And I think COVID recovery.
Exactly, but it includes, I mean, there's a very heavy climate component in there that we've advocated for, and we think it's only right that member states should use these revenues or to use these funds for that purpose. I think there's a bit of a tendency, perhaps, when there's a bit of trouble ahead to get something through. Oh, let's create another fund to get enough buy-in. But I think we now see a proliferation of different kind of funds that, to some extent, overlap. To some extent have similar purposes, and I think we need to first look at how to use the funds that we have better and to make sure that accountability is really there. Of course, that includes revenues that member states get from the ETS. So we're actually supportive in terms of the Commission proposal that suggests to use all of the revenues for that purpose. Of course, we need to make sure that there's an equivalence there, because of course we have a separation in the Netherlands of what comes in and what goes out, so that needs to be ensured. But I think that funding issue, in fact, can be solved, and of course we're topping that up with national funding as well. Just to come back on some of the earlier points, I mean, I think the removals question is a very relevant one. I think we need to look very carefully at the accounting before we insert that. And I think actually the Commission is planning to come out with a proposal of how to do that in practice later this year. Just to give an example, like for instance, if you capture CO2 from a cement plant, and you then use that to produce a sustainable fuel that's used in aviation, for instance, who gets to count the benefits? Is that the aviation company that uses the fuel? Is it the cement company that captures the CO2? I mean, these are kind of issues to be sorted out. And there's an export component to that as well. So, yeah, I think some further analysis is needed there to look into that. But fully agree that we need to further develop that, because ultimately we need those removals. And then again, I mean, some of Pieter Liese's points I think are very relevant as well. We need to look at ultimately how do we make the transition happen everywhere. We have a bit of a concern in maritime as well that there's a limit to which ships are covered.
What do you mean by that?
So basically there's a limit proposed by the Commission of a particular ship size above 5,000 gross tons, I believe is the technical term. We have a fleet that's significantly populated by ships that are below that threshold, so of course we need to avoid that those ships go free and that there's a competitive distortion. So there's various ways of addressing that, but I think there's some interesting proposals there.
What are the sectors that you are missing when it comes to this new ETS proposal? Because I think it covers up to 3/4 of the total emissions.
Yeah, because agriculture and land use are not covered.
Thinking about the Netherlands as well.
I mean, the Commission is proposing to kind of integrate them into one sector later down the line. I think for now we also need to look at the incentives that are there for agriculture and see how we can potentially make them work in the right direction. Because of course, we know all sectors are different and carbon pricing works better in some sectors than others, but ultimately we need all sectors to make the transition.
Thank you. I would also like to go to Jos, because he now is already not on our screen, and we need to do a little bit of effort to also keep him in our panel. Can I see Jos on the screen? Yes, and I was specifically wondering also how you respond to the topic of the compensation for citizens in Europe. You're now in Florence, and I would also like you to maybe reflect on the regional differences within Europe when it comes to the topic of energy poverty, for example.
Yeah, I think there are important regional differences, and I would like to endorse what was said on the use of the funds. You know, that is a very important element, and I think one of the promises of the calculations that Pieter-Willem was making was exactly that on the Innovation and Modernization Fund we would see a substantive increase in the funds available. But the regional differences is very worrying when we look at the impact of the energy price, and in particular the electricity price. You know, we have a lot of the upheaval in the energy market is related to gas, but the translation through the ETS makes itself through electricity primarily. And I'm really worried that in some member states, in particular in the eastern part of Europe, and where the use of coal and lignite is important, that this may create additional problems for the debate we are going to have. Hence my attention that I would like to call on the importance of the price impact, because the ETS is not only an accounting device for emission reductions, you do that through the price impact, and the price impact is quite tense, in particular in member states where the average income of the people is lower than the average. And I think we should be very much aware of that. So that I think is a very important one. But again, the modernization fund is going to be very well funded. You know, that's one of the elements, and the modernization fund is for those member states very important. Thanks.
Thank you very much, Jos. And then we're going to move to Pieter Liese also to make some final remarks, and then we're going to close down the session here as well. There were still also some questions unanswered. Maybe if you can pick one, maybe the one about CBAM, but also if you expect any hurdles for the upcoming lawmaking process. Maybe what's the biggest hurdle you expect? Is it this regional differences when it comes to looking at the compensation of citizens and energy poverty, or what else is on your mind, maybe to close down?
Yeah, I think the social aspect is crucial, and it is crucial related to what Jos has said already in ETS 1. So nobody should say we have it only in ETS 2, because if the ETS price is as high as it is now, it has impact on low-income families, especially in Central and Eastern Europe, and we need to take that into account. We in EPP fully support the Social Climate Fund, and I'm very happy that in both committees, in Ample Committee and in ENVI, we have the rapporteurship. I talked a lot with Esther de Lange and David Casa, and we suggest a lot of elements that strengthen the link between the ETS 2 and the Social Climate Fund. The 25% should be really 25%. If the price of the certificates of the revenues go up, it should be more than 70 billion for the fund, more than 70 billion. We have a direct link with the auctioning revenues, and we also have much more detailed provisions on the other 75% that are spent by the member states. They should also be spent according to the same criteria than the Social Climate Fund, so to really make sure that we support those in need. And what is also important, I think, we need direct income support in a transitional period because people cannot decarbonize their daily life in 1 year. So we don't have the experts, we don't have the equipment, but over time, the direct income support should completely be diminished because we want to help people to decarbonize, not to give them money every year and still they are emitting and still they have to cope with the high energy prices, but we want them to really benefit from the innovations, even if their salary would not allow them to do. Then I think it's very important to have a level playing field for all commercial operators. So it was mentioned in agriculture. We cannot include agriculture completely in the ETS because the methane emissions are much more difficult to measure. So that is complicated. But the CO2 emissions from agriculture are partly covered by the Commission. When you go with a tractor on the road, it's road transport, you are covered. When you go on the field, you are not covered. That's again not very logic. So I suggest to cover all CO2 emissions from all emitters, not only construction, process heating, but also machinery in agriculture. And then on the social aspect, one other point, command and control measures also come with a social price. You know, I was always fighting for CO2 cars, and I was always fighting for more ambition than the Commission. And I was always a bit shocked when my government in Germany, also Angela Merkel, fighted against this ambition, because I think we need CO2 standards for cars. But now we are doing a very big jump. And Jan Huytema, for example, in ENVI proposed 75%. This will also come with a social cost, because the analysis of the Commission some years ago was that 40% is beneficial for the society as a whole. Everything that is more ambitious would come with more costs for society than benefit in economic terms. For climate, it's still important to do it, and I'm in favor. of increasing the existing target. But if we go too far, from my home office where I'm sitting here, I look at the factory where people work and create parts for the combustion engine. And I know they have to change. I tell them they have to change. But if we ask them to change immediately and we will not have the infrastructure and people will not be able to buy this new car, then we also have a social problem. People drive their old diesel not only 15 or 20 years, but 30 years. So that's why this policy mix is important, to have an incentive also and to have revenues to buy a new low-emitting car. And this is another example why I think the 440 million people in Europe have more ideas than we as politicians could ever have. So every individual has options how to decrease emissions, and everything should be rewarded. And that's why we need this policy mix. Then sorry for not answering the CBAM question and my relationship to Mohammed Shaheen. And this is also the concluding remark. As you said, we need to work together and find a solution. I fundamentally disagree with the proposal of Mohammed on CBAM. It's, first of all, unrealistic because it's too fast phasing in of CBAM. That includes a lot of risks, and we may have a backlash. But I go along with him personally. And I'm sure, and we promised each other that we continue, and that in the end of the day, we will make a proposal for the parliament that fits together and that brings ambition and carbon leakage protection at the same time. So this is the way we should work. We have different starting points, but we go along personally, and I'm sure we will make a comprehensive and convincing proposal.
Thank you very much, Pieter van Liese, for your final remarks. I think you just made the new tagline for the carbon pricing hub, involving millions of people with better ideas to join the conversation and to help you. And we wish you lots of luck and wisdom, of course, with the upcoming lawmaking process. And I would also really like to thank Delbeke for your expertise in joining this conversation all the way from Firenze. Hope you enjoy the city today, and maybe we see you next time. So we'll say goodbye to you already. We're not saying goodbye to the audience because, of course, I also want to thank here in person this lovely panel that we had. Sabine Frank, Paul van Dam, and Pieter-Willem Lemmens, also for your presentation. And then unexpectedly, you joined the conversation. I think it worked out really well. You also have to send your model to the European Commission and to Pieter van Liese to have discussions about that. I think this was a lively conversation in which we discovered how this new ETS proposal, if it's fit for 55, and I think we touched upon many concerns, also some optimism, ideas, things we need to keep in mind. So I think that's very valuable. I want to thank everybody also for joining us in the chat. Keep doing that also during our next panel conversation. We'll be back in, let's say, in 1 hour exactly sharp. And we're going to talk about the stakeholder perspective. We also touched upon that topic already with all the social aspects. And we're going to talk more in depth about also the governance of the ETS and how you engage with stakeholders in this topic. So in 1 hour, we'll be back. So please take a pause and then join us. And thank you so much for joining me in this panel. Thank you very much.
Thank you for the interesting debate. Thank you.
Thank you.
Thank you. Bye.
Thank you.
And stay safe.